How would you characterize the restaurant business? Obviously, it is not one entity. It's a bunch of different segments. But how would you characterize it overall right now or segment it?
I would say this, that it's working really, really hard against the macro. And what I mean by that is the macro is going to have to indeed actually work harder to change the routine and the social engagement that customers are getting at restaurants right now. It's not to say it's easy. Consumers are managing check. They're managing how often they go, how much they spend. Yes, there's a little fallout at the low end, but there's a bigger picture at play and almost like non-discretionary, staple-like positioning that this space has as a part of the economy today.
Mm-hmm.
I just want to mention what I've seen. One, I'm just back from a 2-week road trip across the heart of America, and I saw restaurants that were so full and had hour-and-a-half-long waits. It seems to, and I mean at every level of demographic in terms of spending, fast casual as well as pretty high-end restaurants. I've seen it in Las Vegas, that you have long waiting lists and people willing to splurge on this one thing. So if you're a supplier to these restaurants, how can you capitalize on what is still maybe pent-up demand, at least, maybe not for everyday dining out, but for those special occasion dining out?
I love that you did that. We're doing the exact same thing all across the country, getting right in the stores ourselves. And that's what's so interesting, is seeing those same trends. For the food service supply distribution space, right? Very connected. They can capitalize a couple of different ways. They can capitalize on the pieces of the business that are the best margin to them. That means go into the local independent restaurant, and they're not suffering as much as those would think. They could sell some of their private label product. That's a really good margin opportunity. But frankly, it's just getting, the items there on time, getting the spec there when they need it. And that's something they all have, capabilities to do in terms of the balance sheet and operationally.
Let's talk about a couple of the stocks and companies you follow, and I think like. Why don't we begin with Cisco, which I guess is this is a very oligopolistic business, isn't it, Nicole? And they have sort of primacy in it. King of the jungle.
Yeah, I think that's right. Yeah, when we think about Cisco and food service distribution, it makes me think about McDonald's and restaurants, like really own both, right? There's defense and offense. The defensive nature is just simply they're big, they're at scale, they're global, they dominate in terms of market share. But the offense is their balance sheet. I mean, they're still making investments in people. They're making investments in technology that their peers just can't do because they're smaller and they get caught up in the current environment more so than a Cisco does.
What about U.S. Food Holding Corp here, one of the other food delivery services that you like?
Yeah, sure. I mean, I think, in the current environment, performance is best positioned. But to your point on U.S. Food specifically, there's still some things that they're trying to work out in terms of a shakeup with management, and that will get sorted. But the real opportunity, the way we've isolated it in our work, is to look at that gross margin opportunity. So it's interesting to just pause and say, Cisco's so big. Do they have a scale advantage just because the dollars are like 2x the other players? Or can somebody like a US Foods close the gap? And we think they can close the gap, not just as a function of getting market share, so more dollars, but really how they get those dollars. They need to get those dollars with the best flow through possible. There's some discounting that goes on. They have a different channel mix that goes on. They have a different, operating system. And if they can kind of clean some of that up, there is eventually a margin opportunity for them as well.
Quick thought on performance before we have to leave it, Nicole.
Yeah, performance is great. I mean, in fact, fun. They're not recession-proof, but recession-resilient with the Core-Mark acquisition that puts them squarely in the convenience store channel and actually makes them almost as big as a Cisco from a revenue perspective. But where the customer, if they're going to fall out of restaurants, the first stop isn't home. It's in between to the convenience store attached to the gas station. Mm-hmm. And that's now where they're squarely planted.
Very interesting. Thank you very much, Nicole. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.